And we are live, 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 live. Alrighty. And let me check if I can hear myself because sometimes I go live and there's no audio. I want to make sure. Checking the sound and everything. And then kind of give it a little bit more time for people to join in. Mic check, mic check. Alright, I think I can hear myself. And doesn't seem like there is a very low delay. Yeah, man, let's get into this. Alright, as you can see with the topic scrolling at the bottom, I have it's not the topic we're going to cover, but it's just more like a point of reference. My point of reference. Geopolitical events obviously play a big deal in the U.S. economy, and then you have greed, you have shareholder profit and interest. Most people wanna attribute to what these companies are doing to evil and bad and good actors and yada yada. I mean, at the end of the day, what I say is money, greed, interest, shareholder profit, power, control, surveillance, you name it. I mean, that's what I see. It's just one group of people or one person want to control everybody. Playing God pretty much. That's what I see. Yep. So today is going to be less about trading, more about we're going to do a couple research and I'm going to do them live and then kind of explain the video I dropped over the weekend, which is in reference to the canary in the coal mine for the U.S. economy. When I mention U.S. economy, I'm not talking about the stock market. I'm talking about the economy. You and I will go to a grocery store, buying a house, put the participation into the economy, having a vehicle to move around, um, especially for the U.S. economy. I can't speak for international. I cannot speak in detail for Canada, which I'm pretty sure is probably the same system. I can't say anything about Mexico or somewhere on the other side of the world, on the eastern side. I can't speak for those, but I can speak for the U.S. economy and for capitalistic systems. Um, okay, so that's what we're talking about, and that's what this is in reference to. So, Canary is more like a back in the days when you have a coal mine and then they'll have a bird, and then if there's like a gas leak or the earth or the ground is about to move, and then the bird starts singing, and then I think at some point the bird end up flying out, and that's usually a signal, a sign that things are about to collapse or there will be an explosion or the coal mine is about to implode and everybody in it uh, may suffer massive casualties in essence. So that's what the canary is, and that's what this the U.S. economy is. So that I wanted to describe that just for a start. Okay, and the other thing I also would like to talk about the difference between the U.S. economy and the stock market. So at some point back in the days, maybe 1950s, maybe before, there was some loose correlation or dependency between the stock market and the economy. That was at the time when the people that are in charge, they wanted to the middle class to be the bread and butter of the society. Okay, this is when Vegas was open for everybody, and everybody can come in and participate. You have cheap flights going on there, and that was very short-lived. I don't know how old you are, but if you take a look back over the past 10, 20 years, you used to see flights go to Vegas for $400 a getaway weekend. I mean, that was something that was plastered everywhere. Okay, so the economy was open for everybody to participate in, and that was, there was a dependency between the stock market and the market, or at least the semblance of it. Now, the disconnect between the stock market and the U.S. economy and the U.S. market, which I call the street market, I mean, the difference and the contrast is beyond obvious at this point. You know, as more people lose jobs, the stock keeps going higher and higher. The companies, the profit keeps going higher and higher. The more people they fired and they laid off, the more money they make, the more they buy back their own stocks. I mean, this is a separation between the rich and the poor. Okay. At some point, the chicken's gonna come home to roost. You cannot have an economy, without the people. They don't have to thrive, but the people have to be willing to participate. Okay, they have to be willing participants. And at the beginning, things may seem fine. Okay, so the economy, there's a disconnect. The rich are getting richer and then they're making a lot of money. You have about I think it was says 80% of the purchases is made by 20% of the people that make the most money. I mean, this is ridiculous. I mean, the economy is being held by a shoestring at this point, but nobody seems to be concerned until they are concerned about it. Usually in the far past, we're talking about 100 years ago, that usually leads to revolutions and politicians getting their head chopped off. So that's what usually leads to into the past. I'm not saying that is going to happen, but history does not repeat itself, but it tends to rhyme. But at the end of the day, as long as people got subsidized food, they have free internet, and then they can get on their phone. I don't see any revolution happen anytime soon. Okay, so they got us big time. So I wanted to jump on my soapbox real quick and talk about that. Uh, so some of the few things I wanted to cover here. It's about obviously the geopolitical events. We're gonna talk about AI and utilities going higher than normal, and then I'm going to talk about the cartels of the United States. So they may have been involved in some lawsuits, and then some anecdotal evidence about some of the most prominent figures, such as Demi Diamond, making a whole lot of predictions, and then also having Warren Buffett sitting on massive amount of cash for deployment. I mean, this raised a lot of suspicion into itself. So, but before we dive into all that, let's take a look at this market for this week. See what's going on. So yesterday we had, was it yesterday? Yeah, it was yesterday. We had the CPI, and I can't remember there was much going on because normally when you have a CPI, it's usually massive amount of movement, and then you all move one way. So those indicators, they kind of like dying off on the wayside, to be honest with you. So let's see here. Oh, that's 511. I'm gonna take a look at. I'm looking at a different chart here, and I'm looking at to see if there were any massive movement. Nah, there was none. Nothing spectacular. I mean, it did move, but not a whole lot of movement. All right, let's bring up the chart. See what did it do for the CPI. And I'm not saying to ignore those events, but it's just becoming less and less important. The economy is being reset. Okay, that's the bottom line on that. The economy is being reset. Things that used to be are not what they used to be anymore. Yeah, so this is what we got for the CPI. That just a blip, a small blip. Right. Nothing spectacular. I mean, if we're talking about 2 years ago, when we're talking about CPI, I mean, my goodness, man, you will see price move like 100, 300 points one direction. I mean, if you get it right, you get it right. But if you get it wrong, yeesh. So that's that small bleep in the radar. Let's go back into this. So for the rest of the week, I'm not anticipating anything big. I mean, the only biggest thing I'm me anticipate to see is um, if Trump send a tweet and it will send the market one way, but it will have to be like a massive tweet, like okay, we're resuming obliterating somebody on the other side of the world. So that's the only thing I anticipate that will move the market. And but other than that, whatever is going to tweet, I mean, I think people are starting to get used to it. I mean, I don't even know why people was reacting to his tweets anyway. Um, Pathological liar. So it's that. Yeah, let's take a look at gold real quick, and I'm going back to what is the canary. Okay, I'm going back to that, but I just wanna go to the regular fashion pattern on what those things are. Uh, we're looking at gold going on the range. It seems like silver wants to edge out a little bit, but I don't see and I don't foresee any much momentum. We're getting a little bit more momentum on Bitcoin. Okay. Yeah, so it's that. What else we got going on? So the US 10-year note though, it explode. Between last time I dropped the video to now, I mean it moved massively up. I mean that's a huge movement up since the last time. Man, yeah. And I think this is moving because of the uncertainty in the market and price of things is about to be shaken up a little bit. And you have people that are invested in the market, they want a higher return on investment because they feel like if the CPI is moving higher, so they want more return on investment, which is why it moved up so much, right? So that tells me that they already knew that the CPI was going to be higher. Now, with that being said, let me take a look at the report for CPI. Yeah, I usually don't check these things because I don't think it matters in the grand scheme of things. Oh yeah, so see, I didn't even check. So yeah, it went up. Obviously, I mean, if it would have went down, I mean, it would have been like, really, come on, what? So month over month, it went down. Year over year, it went up for food and energy. I mean, really, like, do you feel that in the price of things that you buy? No, I mean that thing is inflating and going up. So let's see what else to look into. All right, so let's dive into it. So this is what Jamie Dimon mentioned last week in October. Okay, so because of the recent default in the private credit market, especially auto-related bankruptcies, because last year we had a lot of bankruptcies in the market. There were some companies who went under. They have 1 to 3, 5 loans for one particular car, and then pretty much Jimmy Diamond said, wherever there's cockroaches, signaling broader hidden issues in the rapidly growing non-bank leading sector. I mean, that private credit market was created, I think it was become popular at least around after 2008, when they put in a lot of regulation on things. And people with a lot of money, they want to find ways to make money, so they just give it a fancy name, private credit, and then they're washing the money on the side without any supervision, without any regulation, so on and so forth. And it looks like now the rear end is about to get exposed. I think they're gonna get bailed out anyway. I don't think. I mean, yeah, it was Tricolor. It was one of those companies, right? First brand. I don't think. I mean, beside this company going under, which people are gonna get laid off and lose their job. I mean, the CEOs, the people that are in charge, they're not going to be affected by this. Okay. And I'm not saying that because these people are that smart. It's just they have risk and they edge the bets. They have millions to spare, pretty much. So that's one of the signal. Even Jimmy Dimon himself, I believe, the CEO of J.P. Morgan, if I'm not mistaken. Oh, yep, J.P. Morgan, Chase CEO, Jamie Dimon. I mean, if you have the leading person that is leading a big bank and saying all this thing, I mean, is it saying this to get people fearful? Is it saying this to really warn us, the plebs, how to guard ourselves? I don't know. But, I'll take his warning into consideration. And then now on that topic of auto loan and all that stuff, you have people who bought cars for way over asking price, right? So they bought cars for $60,000-$70,000, and those people, they tried that was on 2020 all the way until 2024, and then those people, they're upside down on their loan. So that car that they bought for $90,000 is now, that car itself is worth $45,000, but they still have a loan of $87,000 they have to pay, even though they've been paying it for the past 5 years, because the interest has been going up. And that interest we're talking about is this interest here, the 10-year note and the 30-year note. So that's what we're talking about right now. And some of those people, they're trying to trade in their car, and they're immediately upside down, and some of them, they cannot even trade in the existing cars. And with those existing cars, they're facing repairs, they're facing higher insurance rate, and unless they're locked in the interest loan, which I think the interest loan is locked in. See, I don't know anything about this because I don't finance cars. I mean, financing a car, it's, I don't want to belittle people, but it's insanity. It's not normal. You're supposed to have something that take you from point A to point B with no headache. And yeah, I get it. Buying a used car will give you a headache at some point. But these new cars, they're not any better. They get recalled all the time. The engine blew up. They get caught up on fire. Like, they getting massive recalls. The new Broncos are getting recalled. I mean, these new cars, they're not that much more reliable. You are safer in a 1990s car, in a Bronco that was made in the 1990s, than any new Broncos out there. Yes, it has more bells and whistles, more technology, and Bluetooth, yada yada. Hey man, I get it. You want to enjoy new things, but if that car is in the shop all the time, what is the point? Which I believe about 3 years ago, Amazon CEO Jeff Bezos said, hey, if you don't need to make any big purchase, do not make any big purchase. I remember when he said that. I mean, sometimes every now and then, those people, They drop you a few bones here and there, few warnings, but most time people don't listen. People don't pay attention. I mean, we're talking about a CEO of Amazon who sell a lot of product, who would want you to buy a lot of product, and is already telling you not to make any big purchases, like buying a car, buying a house. Yeah, because everything was at the peak top, much more expensive, you know. And if you buy anything in 2023, I mean, not only you bought something that is very expensive, but you're financing it at the highest rate, which is what's going to lead you to the poorhouse. Okay? But the banks love it, though. The banks love it. Let's see here. So, and I believe, I think it was Jamie Dimon also who said the same thing. Swim, something about if when the tide goes off, when everybody's swimming in the ocean, you cannot see anybody naked until the tide washed off. I want to know who made that comment. Tide wash off. You see. He's swimming naked. Okay. Yep. Oh, there you go. It was Warren Buffett. Okay. Attributed to the only when the tides go out do you discover who's been swimming naked. I mean, this is all like signals and things and the context people are saying. Like they're telling you, watch out, be careful. Be fearful when people are greedy. Hello. Be fearful when people are greedy. Be greedy when people are fearful. Guess what? Back in this year alone, between February 2028, between February 28, wow, between the February 28 and in the end of March, the market was as fear, extreme fear. But guess what? You had no desire to buy because you feel like the everything was going low, and I mean you feel like the market was about to plunge lower and lower, so you had no confidence to buy anything. But at that time when most people was fearful, this is when to buy. I mean, let's take a look. I think it was October. Let me change the time frame here. I'm going to change it to daily. And again, this stream today is a little bit different. It's not about taking trade. I'm talking about more like the U.S. economy, the economy that you and I participated. Yeah, we're talking about March 31st. I mean, the market was going sideways. And if you take a look at the history of the fear and greed index, right here, yeah, it was at extreme fear. Okay. Yeah, so these are the momentum in the market there. Okay, so it was at the most fear, but now it's at the highest greed right now. Extreme greed. It's projecting to go into extreme greed. Okay? So I'm not saying you go short from now because I'm not. I mean, it's a great melt up. It's gonna keep melting up and all the way up. But at the same time, be careful if you're trying to go long from here. It's I mean, we had a slight pullback here over the past few days or so. Uh, I'm waiting for price to get above, let's see here, get above 29,448, and then maybe do a small retracement and go higher. That's probably when I'll be able to get in. But until this point, yeah, I will stay out for a little bit. See, a month ago, it was fear. A month ago from today was what, April 13. Let's take a look at here. Let me put 13. Look at the chart to see where we were at. Yeah, so the market was still coming out of the fearful side. So it was still fearful around this time, April 13 area. It's when it got above 26,463, that's when we had a little bit less fearful, and then the market was just more the greedy side. Okay. So all these also contribute to the Canary, which is singing. I mean, we'll talk about, yeah, we're swimming tide. That's the Canary is singing, and we're talking about the previous example that I had before, Jimmy Diamond, uh, cockroaches signaling issues in the more non-bank. But I want to bring it to this one right here, the cartel of the United States. Okay. A Texas-led coalition of 13 states is suing BlackRock, State Street, and Vanguard. Those are the biggest cartel in the United States. Um, you look up what the definition of cartel is, and then get back. But they are the cartel, and allegedly conspiring to limit coal production to ESG initiative, violating antitrust laws, and driving up energy prices. Man, this is old news. Like, this is old news. And it's not because it was filed in 2024. I think it was filed in 2024, if I'm not mistaken. But what I'm saying, this is old news. Like, now they're into the AI data centers right now. They're not even getting sued for that. They're getting sued for that ESG initiative, which I think was BS from the beginning. But a lot of companies they twist their arm to participate in. It's okay. Uh, but and the reason why those companies they feel like the arm were twisted is because those three cartel they buy a lot of shares from the individual companies, and they control the board, and they tell the board what decision to make or what not, what to invest to, what not to invest to. And if they don't get invested into it, not only the shares are gonna drop in value, but more than likely, obviously, the board is gonna get laid off and fired, and then they might even get a lawsuit against them. I mean, when I say these are cartels, they literally behave like cartels. Right? So if you watch, there's a documentary. I believe it's on Netflix or Prime. It is called "The Man Who Built America." I mean, if you watch that series, that entire series, you'll get a good understanding, like companies, why they do things, why there's only one ketchup company that produces mostly the majority of the ketchup, why you only have one company producing mostly Kimball, producing all the soups. Like you get a very good understanding the history where they come from, and then you look at it right now what's going on. You see, all these companies are merging, buying one another. This is a war. You know what I mean? So there's no even though those people they put on suits and then they smile. I mean, they're having little wars on the bank accounts with digits and money and buying off asset, lawsuits, accusation, false accusation, and all that. Okay, so that's that going on. I wanted to mention one more thing here. Oh yeah, let's see here. So my thing is, um, those companies, BlackRock, State Street, and Vanguard, they've been here for a long time. It's obvious what they're trying to do. Okay, so to me, I mean, I think they're gonna all end up settling. I believe Vanguard settled, if I'm not mistaken. Yeah, so I think one of them ended up settling, and then two of them keep on going with the litigation. And I think they're just gonna end up paying somebody. or they're just gonna end up settled, and then at some point you're not gonna hear anything about it. Guaranteed. That's what happened all the time. The question is, these people, they are making 10, 20, 50, 100, 200 years plan. They're not making plan for the next year or the next quarter. They're making moves like every quarter. They're breaking down the moves that they are making into quarters so they can say, okay, are they going toward that goal for that 100-year plan goal? And what I mean by that, so they started with that ESG initiative, okay, so they can limit the coal production, so they can take control over the electrical grid, the resources, and the natural resources, so they can use that and control it, and to power the AI power plant initiatives, okay? So they can have more control of the companies, more control of the population, so they can have much more efficient government, so they can make faster, better decisions in the future. But they want to do all of that. They want to socialize the cost and the burden with the population, but take all the profit for themselves. So that's what's going on there. So the reason why I'm saying this is old, I'm not saying it's not valid. I'm just saying it's old because they already move on to the next project and the next initiative, which is data center. Okay, let's get that. Now I'm gonna bring all of this together to trading. Now I know you're looking at this like, okay, what does this got to do with trading? This is the economy. It has everything to do with trading, and I'm gonna give you one piece of reason why it's related to trading. It's related to trading because these companies, as long as they're in control, the market is gonna be permanently rigged to go up, which is what contributes to the great melt up. Just like a company lay off the company, they lay off the employees to make money. When they control the natural resources, when they're building data centers, when they are taking control of all these things, what's going to do is going to give you less shares of these natural resources. So you have less control of them. They have more control of it, and then they're gonna rent it back to you. Okay, so which is why in that book, 2019, I think it was a COVID book. I forgot that name, the name of the guy who put it out, and then they say you own nothing and be happy. See, it's all leading there. It's all leading there. Okay, let's see. Obviously, you can see that I cannot multitask. All right, but let's go back to this one right here. Okay, so we said in 2025, rejecting most of the firm arguments to dismiss, blah blah blah. So this is where we are right now. There's a separate action in February 2026. Montana Attorney General, which is a separate settlement agreement with Vanguard regarding investment in coal producers. So they pretty much try to kill any energy independence for the United States because those companies, they are not national companies. They are transnational, meaning they don't belong to just one state. They don't belong to just one government. Those companies, even though their headquarters might be United States, but they are not loyal to United States, if you catch my drift. So just because they are here, just because they have an American flag in front of the headquarters, when you drive by the headquarters, just because it's run by American doesn't mean it's an American company. And I know it's hard for people to see and accept, but they are not American companies. They are an entity of their own. Okay, they have their own social security, if you want to call that, and then they make their own move. They can up and leave United States and relocate to any country, anywhere at any time. They can relocate to the moon and still have the same effect and still operate the same way. They have no allegiance. Yeah. Again, if you look at the screen, the wordings that have screening at the bottom, they have the allegiance to interest, to shareholders' profit, to greed. So by greed, I mean make money, squeeze everybody else, mergers and acquisition, defeat any competition, complete monopoly, complete control. That is the ultimate goal, and they want to hold on to it for as long as possible. Okay, let's see. Yeah, I don't think I'm gonna get what I'm looking for here, but yeah. So when it comes when it comes to utilities, right? So most of these utilities, those data centers, they use a lot of energy, a lot of resources, a lot of water. Okay, and then those utilities is subsidized through us, to the state, for the state to pay. Okay, they use pipelines and they redirect pipelines to the data center, and then we're holding the bag to fund these against us in the future. Yeah. So that's that going on, and it doesn't seem like they're gonna get stopped. I think they're gonna get slapped. They're gonna get a slap in the wrist. They could just end up gonna pay the fine, and then they're just gonna keep on moving. Okay. So I say all that to say this. Okay. I say all of that to say this. I mean, I can dive into this a little bit more, but I think by now you understand what I'm trying to get and what's going on. At the end of the day, they want this to keep going up and up and up. Yes, you're gonna get some small retracement, some small pullback. Okay, but at the end of the day, they want this to keep going up. They want to keep making more money. They want to buy more shares. They want to buy more land here. At some point in the future, you're going to hear those companies, they're going to buy island. They're not going to just buy a property. They're going to buy a whole island. They're going to buy a whole country. You name it. There's no stopping this because they want this to keep going up. And in order for this to keep going up, they have to keep squeezing. Which is why they're investing in AI, and they are investing in space. They are working closely with the government of United States and the government of China to create a whole lot of technology to AI to go into space. And yes, don't buy the ridiculous notion that United States and China, they are enemies. Okay, let's stop. Stop. They're all working together. When there's a WAR, the war is not against the government, it's against the people within the population to reduce the population. Okay. I know it's kind of getting into the conspiracy theory territory, but I mean, do you have any better explanation? Do you have any better explanation why the insurance in your car is going up? The insurance in your home is going up so dramatically. Uh-huh. Do you have a good explanation why? I want you to think about this. I'm gonna do a quick search. Why homeowners insurance is going so much, and then you're gonna see the ridiculous answers. See, yeah, people typing this. Yeah, we're building costs, and I'm not saying this is not valid, but again, yeah. So higher building costs, severe weather, natural disaster. We're gonna take a look into that. We're gonna take a look into that real quick. Original claim history. So that means if a lot of disaster happen in Florida, they're gonna spread the risk with the rest of the country. Again, they socialize the cost, the risk, and the burden, and they kind of capitalize on the profit for themselves. Okay. Original claim history, rising home value. What's causing the home value to rise? It's the same house. Nothing new was added to it, but it keeps going up. What's the reason? How come it's keep going up? It's because the same people, BlackRock and all those people, they are bidding and buying homes, raising the value of those homes. So if one house in one particular area is sold for, let's just say normally it's 200,000, and then at some point one house gets sold for 350, somebody else say, hey, this person down the street sold the house for 350, why should I sell mine for 300? They're gonna sell it for 350 too. They don't have to buy all the houses, they just need to buy one or two in that particular area, and then everybody is gonna participate in. Okay. Higher home value leads to higher insurance claims, leads to higher tax, leads to higher everything, leads to hiring of middle management people in the city, in the county, to start claiming more taxes against you. Like it's a doom loop. Okay. And what can you do? Shop around, blah blah blah. Now, the reason why I say I want to take a look at this is we want to take a look. It says here, frequent, 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 and intense disasters. Intense? Hurricane, blah, 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 create massive losses, leading insurers to increase rate. Now, I believe this. Kind of believe this. That is definitely true. This one, yeah, I don't know about that. But this one, yeah. Let's take a look at that. Over the past 50 years, we had now, yeah, I don't want to pre-answer that, but I just want to do a quick research and see. Okay, they increased fivefold. Okay, I believe them. But again, it's also because population is increasing, and those natural disasters tend to happen in population concentrated areas, meaning in center cities, where there's a lot of people living there. That's usually where the disasters are happening. Okay, and like they said here, improve reporting. Decrease even economic losses are skyrocketed. So there's been less death, but more resource losses, right? So there's that, and because the repair cost is so high, so the cost of it, the cost of those losses is really high. But I want you to kind of like think outside of the box a little bit. If companies are building homes that are cheaper, better, faster, why is the cost increasing? The whole goal of companies is to make things cheaper, better, faster. Okay? How come the cost is increasing? But if we're looking at these homes, the new build homes, are they better? No. Are they cheaper? No. Are they built faster? It's arguable. So the whole notion of cheaper, better, faster for companies is for them to increase the profit. Again, if you look at the screen at the bottom, it says for greed, interest, shareholder profit. That's the reason why they want to build things cheaper, better, faster. For them, not for you and I. That's the trick. Like sometimes when those people say those things, it's usually missing a couple sentences. Building things cheaper, better, faster for the company, not for you to buy at a lower price. Not for you to buy at a lower price, at a better price, and then what you, instead of getting your home built in, I don't know, in 200 days, you get it built in 20 days. Yeah. I mean, you have those new startups, they may have the right idea to do that. Okay. But once they encounter a couple lawsuits, they figure out real quick the idea of building home cheaper, better, faster to help and improve the community is for the birds. And then that's when they go on the route of doing a lot of sneaky stuff and sneaky accounting. Okay. I've attempted to start companies, so I know what I'm talking about. Yeah, you may have great intention, but when you get a couple lawsuits and people go after you, and then you're like, man, the people, the same people you're trying to help, and they're trying to destroy you. Oh, you get a wake up call. You get a wake up call, which is why those companies, they behave like cartel. You got to get inside of the mind on how they think. Those families who started those companies, maybe over 100 years ago, I'm sure they had great intention, but at some point, I don't know, IRS is going after them, and they get lawsuit left and right, and then they kiss the nanny goat, and and then they took a different path, and then they figure out real quick, this is not love, this is war, and then which is why most of these companies, they get corrupted. Okay. No, now here it says yes, over the past 20 years, it has increased fivefold. From my personal anecdotal evidence, I haven't seen more frequent disasters. Um, it just happened in areas where there's heavy population. Okay, so it's not like we get 50 hurricane every year. It's increasing. You got 50 hurricane per year, and then last year you have 40, and you have 30, and then now next year you're gonna get 75. No, okay. You just would happen in dense populated areas. So to me, that's that. Again, it's my own anecdotal evidence. Uh, let's see what else to talk about the Canary in the coal mine. Da, 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 da. Price of oil. Yeah, we're covering a lot of things today. Yeah, I cannot spell. You know what? I cannot spell that word. So yeah, so let's talk about straight over moves and where we think things may be going. Um, to me personally, I don't think this WAR is going to stop until one party completely annihilated another party. I think this conflict is bound to stay and to keep on going. Okay, they may take a pause here and there, but I don't foresee anything. Yeah, I don't foresee anything stop at this point in mid, like they're not gonna have a choose. Things are going to ramp up. I don't know the timing of it. Oh, there's one more thing I wanted to share real quick. Yeah, I don't know what will be the timing of when things will be ramping up, but it's bound to ramp up, and it's not just going to be in the Middle East. I think it's going to be spread out all over the globe, like Europe, Middle East, which is part of it as well. Let's see. All right. So I'm foreseeing gas prices to go up even higher from there, and that's going to increase the price of diesel, which is going to slowly over time increase the price of food. So we haven't felt the shock yet for the price of diesel and for the price of food to go up, but we will slowly start to see it, over time. I'll probably say in the next quarter or so. Okay? Uh, I wanna take a look at one last thing to tie it all up. Okay. And again, this is all anecdotal, but again, it start as anecdotal, and then when it comes where you're like, oh crap. Shemitah year. All right. So this is what they call the Shemitah years. This was shared with me with a friend, and it is a sabbatical year. Okay, and so it's the seventh year of a 7-year agricultural cycle in Jewish law. 2029. Okay, let's take a look at the previous cycle. mm, these. Okay. Do you find anything interesting about these? World Trade Center, the Great Recession. I think that's what it was called. Right? And I believe there's something that happened in 2014, 2015. I think it was in reference to, yeah, I can't remember. I know something happened in 2014. It wasn't a big deal. I think it wasn't a commodity. Yeah, it was definitely one of those forex exchanges that got depegged. I think it happened around that time. Yeah. So there's that. But I also want you to take a look at this 2028, 2029. Okay. So there's that. Keep that in mind. 2028, 2029, we may see something that happens similar to this, to 2008, 2009. Now, especially with what's happening on the other side of the world, you have data center in Saudi Arabia being tear up. Let's just use that word. Um, we may see something happen around that here. Okay. All right. So we have that 2026 World Cup. I don't think there will be any significant things that happen in the market, but in the economy, maybe. Um, and I want to tie the Shemitah here, with the banner cycle. Let's take a look at that real quick. Let's hopefully pick the right one. Okay. So you have 2026, the year to make money. So far, it looks like you can say we're on target. So I shared this one, I believe it was late last year, and I did a stream on this. Um, I mean, at that time, it was kind of hard to see how you're going to make money in 2026. But again, those things are hard to see sometimes, okay? Until you leave the couple cycle and see. So this year so far is the year to make money. What would be the year you don't make a lot of money? Years in which panic will occur. And here it says 2035. So So your whole time low prices, good time to buy stocks. So it looks like between 2026 and 2032, it's heading toward C, which is this part. Years of hard times, low prices, a good time to buy stocks, corner lots, goods, etc. Hold till the boom reach the good year times, then unload. Sheesh. Sheesh. That's literally giving you the game right here. Man, I mean, I want you guys to take a look at this. So you got the Shemitah years saying that the next cycle for a bus cycle is 2028, 2029. But it may happen as late as 2027. So the Canary may start singing in 2027. And then it happened in 2028, mid 2028, which correspond to the year where you after you make money, now it keep going up and it's just gonna keep sliding down. Okay? Between 2026 and 2032, where it's gonna lead to years of hard times. Wowzers. Bro. Yeah, man. So that's 6 years. 6 years of decline. My goodness. Yep, been a cycle. I mean, so far I'm not saying that, this is the end all be all, but it is definitely interesting. Alrighty. So with that being said, I think I am going to end it here. Okay. Let's take a last look at the chart real quick. So today was a little bit different. Yeah, so it wasn't a lot of trading today, but next week I promise I'll get back to that. Uh, yep, I had a short from here to here, and I wanted to unload down this level here. Got real close, and then knocked me out. Hmm. Yeah, I should have known with all this back and forth here. Should have known better. It's all good in the neighborhood. All right, let's take a look at what's coming up next week. What do we have going on next week? So, man, we have on Wednesday we have FOMC. On Wednesday, May 20th. Uh, for the last FOMC, I haven't seen anything noteworthy and interesting. That dual trading strategy, I'm not saying it's out, but yeah, it's questionable now at this point. I mean, everything's being reset. And one more thing, guys. If you have a way right now to make money, think about another way because that's going to change. So don't rest in your laurel that things are going to remain the same. Things are just gonna constantly shift every 2 to 3 years. If you have a portfolio, you are getting a lot of dividends. Those dividends may dry out. You know, um, I know they will relax on the PDT rule, but there's another rule where they're gonna limit you somewhere else. Okay. Um, Now that you have the opportunity to trade and back and forth, I'll say enjoy those time. They may end up taking those away. Okay. Right now, if you ask me, being a trader is a real career. Why? Because this thing I have been going up and down, over the past 100 years and non-stop. Yeah, it's never stopped. Okay, so you have a whole lifetime to sit around and figure out how this thing works. It's not like your job, your boss feel pissed off and then you get you laid off. The only way you get laid off from this is unless you say, okay, you know what, I quit. I don't want to do this anymore. Okay, but this thing will be around, open, high, low, and close. I mean, how much can you beat this around? Okay, take a look here. Let's just take a look at this particular area only. Open, high, low, and then close. Same thing here. Open, high, low, and then close. So low, open, close, and a high. That's it. Either close up or close down. Either go sideways. And then the next thing you have the gaps, and then you have the wicks, which can make things a little bit more complicated if you ask me. So figure it out. So this line right here is a gap that was created yesterday. Okay, let me double click on that. So yesterday 512 at 9, I want after 9:30, still being respected here and respected here, even though it was short-lived. Like, this is knocking on heaven's door, knocking, trade above, and it was gone. Okay. So we have this huge open area right there. So two things can happen in this particular area, which is why it's going sideways. Yeah, I mean, I cannot just do a session without kind of like give you some of this game. I got to. Okay. Funny how that works. 8:31. That was the largest candle since 8:30. Attempt to get there, didn't get there. Get into it, now it's going sideways. So what I want to see next, I want it to trade above, sit on it, and then go up. That's the only bullish scenario I want to see. But other than that, as long as it remains below this line, 29, 344, 25, I'm about to call it bearish. Okay. And if you take a look at that particular area right there too, which is right on top of this, 24, 4375, 34625. If you go back yesterday, I want you to take a look at this particular area right here. On Monday, 511, 936. I want you to take a look at that candle. Okay, 511, 936 candle. There's a big gap at 936. I want you to take a look at that and then see why is price trying to get in and around that. It's having the same effect down there too. Yeah. Maybe I should show it on that chart right there. Booyah, booyah. Okay. Nothing is random. Nothing is random. You just don't know what point it's referring to, but nothing is random here. Now, at times it may be difficult to try to get an idea, especially when they're doing manual intervention. It's kind of hard to see where they're trying to careen it to, what they're trying to pit it against, but still not random. See, I like that move right there. and then I want it to light touch this or come to the middle of this and then keep going up. Yeah, and then once it takes off, that's it. I think once it takes off, and then it's gonna aim for those high here. Yeah, I'm probably take some load off. If I get in, I'll take a load off of here and then take some over there. Well, it looks like it's gonna go without me, and that's fine. Alrighty, that's all I have for today. I will drop another video over the weekend and kind of like touch up on some of the topics we covered today. And I can't promise a live stream next week, but I will try my best. Happy trading, guys.